Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors for this segment, Admiral Markets. Gives a great pleasure to introduce Mr. Zach Mir. Zach, how are you doing?
Good afternoon.
Darren Sinden, the market commentator who's normally on this show, will be back with us on Monday. So Monday back with Darren. In the meantime, as we go live, the Chinese have just cut interest rates.
Yes, they're always, it's normally around sort of 12:30, 11, 12 o'clock UK time. A little bit later than normal this time, but always a surprise. They were supposed to be doing something. Maybe the fish and chips that the Chinese president had with David Cameron sort of made them think of, well, it's time to cut rates.
To reciprocate.
Yes, exactly.
So obviously the markets have rallied like a homesick angel.
That's right.
More cheap money or cheaper money.
Yeah, I think, and also just the Chinese rates around 4%. We've got plenty of leeway to celebrate every time they lower their rates down to zero like everybody else. So it does look like we're rather underpinned. Gold's gone up as well, and dollar down a bit. So you know, it's shaping up in a quite bullish way after the August-September rout that we had.
Understood. And,
distant memory now.
I was reading as we went to press the fact that in terms of some of the research suggesting we could take out the old highs on the S&P sooner rather than later.
Yeah, I mean, I think people have flip-flopped quite a lot on, you know, it's going to agree a crash and then it's going to be the all-time highs, but that shows the volatility, also shows the sort of uncertainty that there was around interest rates in the US.
I don't think interest rates are going.
Yeah, I think that the realisation they're not going up is the real.
Okay, if you're watching for the first time, we've got a number of slides to go through. Let's kick off with the first one. Data released over the European session had some China house price index numbers for September and China PMI number. In France, we had the market PMI, Germany the PMI, and the Eurozone market PMI as well. I've got to say everything broadly in line. I would say there's nothing particularly outstanding.
But you can see why the Chinese lowered their rates. House price index looking rather sickly, and the Caixin PMI as well. That's 47. 47 is below 50, which is in contraction, which is quite an achievement when you've got nearly 7% GDP growth. But there we are.
Understood. In terms of data points to look ahead to next week, Zach, we've got the German IFO business climate on Monday, Eurozone private loans and M3 money supply on Tuesday, French consumer confidence on Wednesday, and Spanish retail sales. Again, not big headlines. I think the fact that the market has absorbed the latest China GDP number, we've had the non-farm payrolls out the way. Is there anything in the back of your mind that might sort of move the markets, or do you think it's just a sort of the start of the Christmas rally?
I think it looks a bit like that. I suppose the only thing which is left are the remainder of the US Q3 reporting season. But you've had one or two. I think IBM was rather sickly, but in general, you sort of remember the good ones, and also that the bar was so low. It's not really affecting the market. Plus, if interest rates, if it is bad news on the earnings season, it means that interest rates are even less likely to go up.
Yeah, so bad is good. So looks quite clear now.
Okay,
let's move on to the next slide. We've got the UK movers today. Cable and wireless up over 9% on the back of M&A. We've got Man Group up 4%. We were like that on the chart earlier in the week.
It looked like a bit of a gift, and obviously with the market going up as well, the FTSE looks like it might break at the key level on the FTSE 6,500. We break through that, we break the downtrend line of the summer. The other stock there, I suppose, Glencore, always in focus at the moment. Still. Not out of the woods, I would say. There's still, they've got things to sell off and things to reorganise.
But they've got huge debts on that balance sheet.
But I suppose if they can survive that, if they can survive all that $30 billion, it's still an issue of they're almost like calling the bottom. They were effectively calling the bottom in the mining sector with that. So a lot of junior miners.
Investec came out and basically rang the bell for the load.
Exactly, that's right, yes.
So the weak stocks in the UK today, Pearson's down 4%.
It's still reeling after the
sale of the Financial Times.
Getting rid of that, getting rid of the FT is almost like selling the family silver there. And even though even if it wasn't doing much for the company, it was a flagship group, and it's sort of as if the company's lost its mojo with the loss of the FT.
Understood. Talk. Apparently there was a data break. They were down 11% at one point. So I think they've obviously rallied back.
I think the data thing is embarrassing, but really, But
again, I think I've read 4 million people's credit card details were...
I'm sure that if somebody wants to find your credit card details, it's not that difficult anyway. I think it's actually a buying opportunity, probably along the line. Whenever you hear of a data theft thing like that, it's actually a buying opportunity.
I think actually more like a cyber attack. So
yes, exactly.
Yes. And William Hill down 9%, just going to show that...
sometimes the punters win.
Yes, well, Chelsea have helped the punters, been inconsistent, I read as well. Okay, so let's move on to M&A rumours and movers. Liberty Gold Global in talks to acquire Cable and Wireless in a deal worth as much as $5 billion or $8 billion if debt is included. CWC stock rallied by 20% on the news on Thursday. The company operates a portfolio of telecom assets in the Caribbean, Panama, the Seychelles, amongst others. Put up and shut up deadline is November the 19th under the UK takeover rules. However, sources suggest the deal could be concluded ahead of the deadline. Well, that would please you, Zach.
It would. I think the only thing which is upsetting is that Mr. Malone didn't do anything with Vodafone, but Vodafone actually looking more chirpy today, up 3 pence. So maybe with the CWC situation, it actually means that Vodafone can move on, and we can look at the company as a standalone situation.
And just to wrap that up, John Malone is Liberty's biggest shareholder, and the approach to Cable comes less than a year after Cable paid $1.9 billion for Columbus International, in which Malone had a significant stake. So. Obviously good for the market, a bit of M&A. Let's look at the next slide, so the US data points to keep an eye on. We've got the flash manufacturing PMI for October. Again, in some of the websites I reported, it basically said that there's nothing to look at today. Yes. So a quiet day on the Wall Street. Obviously, we're in the Q3 earnings season. Next week, Monday, new home sales for September. Tuesday, we've got the durable goods for September. Wednesday, an FOMC meeting. Thursday, weekly jobless claims. I guess that the FOMC could open the meeting and close the meeting, couldn't it?
I think so. I think the situation there is that a lot has happened in a way since the last meeting, especially with the China moves and everything else. And the only thing now is whether, I think Draghi was hinting, moving in December, maybe that's a hint that there will actually be a move from the Fed in December as well. So that he wants to take advantage of that. But the central bank is always very mysterious.
Yes. Let's move on to the last slide for today. The US pre-market movers and levels. Alphabet, formerly known as Google, up 10%. Google holding company posting an impressive earnings beat and bounces hard. Skechers, mnemonic SKX, space US, down 21%. Q3 revenues miss forecast as shoemaker company balms strong dollar and sluggish domestic retail environment in the US. Again,
I think the tech giants, the Facebooks, the Googles, just absolutely on fire again. So Facebook just nearly $100 as well, near the highs, and Google towards the top of the range. Well, Alphabet towards the top of the range. So that is interesting. Obviously, the old economy not looking so healthy with the
Skechers. The Walmart profit warning was a classic example of that. In terms of chart points, levels to watch today: FTSE 63.20, 64.20 to the upside.
Probably already smashed the upper end there.
So apologies for that. We obviously.
Well, that was courtesy of the Chinese.
So 6,500 round number.
6,500 is the resistance line on the chart from let's say, where are we? Actually, yes, from May. In fact, 64.20. In fact, so in a way, we're probably right through that.
Understood. DAX 10,550 plays 10,700. S&P futures, S&P cash even 2020 plays 2038, and the Dow 17,153 plays 17,300.
All of those levels out of date now with the China move. They probably added another 100 points to the DAX and 50 to the FTSE, etc., etc. So just blasted through that.
Understood. Right. In terms of currencies, Euro 110.87 to the downside, 112.15 to the upside. Aussie US dollars 71.73 plays 73.67. Dollar yen 119.60 to the downside and 121.32 to the upside. Finally, the mighty great British pound cable 153.58 to the downside, 154.92 to the upside. Right, so just to wrap up the week, a good week for the equity markets.
Yes, again, defying the skeptics, and with the China rate cut is just icing on the cake. You had it's a double whammy, or a double dose of good news there with the first the 6.9% GDP and then the rate cut as well.
the bulls are back in town.
So, you know, China was supposed to be what's dragging us down.
The laggard.
The laggard. It's actually dragging us back
Sounds
up
like
again.
a leader to me.
Yeah.
Zach Muir, thank you very much for that. That wraps up the Wall Street Crossover Show. We'll be back Monday at 1 p.m. Darren Sindon, the market commentator for Admiral Markets, will be joining us in the studio.